Good morning, guys. Welcome back to my channel. And this is a follow-up video from the short play that I made, the short trade that I was calling out. Essentially, I put out a couple videos the last, I think 2 or 3 videos, saying that I think this is the top of the bear market rally. And today we're seeing price action that's confirming that. It doesn't necessarily mean that it's going to hold, but today it's telling us that that was the top of the bear market rally. So I don't need to do much trading this morning because I'm already positioned. I saw the signs. The charts told me that it was time to get short. I got heavily short, and I'm positioned, and I was positioned for some sort of a reversal. Looks like we're starting to get that reversal. We'll go through the charts. And so I don't need to, I already have my position. So things are going good as of today. Let's go ahead and get into these charts. Before I do, give me a thumbs up if you are finding value in the content. Let's get going. All right, so here's your Nasdaq futures, bearish rising wedge here. We broke the wedge the other day, heading lower, and not too impulsively on the futures. This isn't like a crazy sell-off in the futures, so that's something you'll see a lot of the time is, you'll see kind of the initial trap, and then maybe you'll see a disbelief that the rally is over, and so you don't see impulsive selling, and it takes a second, it takes a day or two for people to realize that they're wrong. So I'd expect the selling to increase over time, and that's where I think we're heading. I think we're heading south. Let's go into the Qs. So look, we've got support here. There's this gap right here. We had this gap, and so you've got the gap entry at 207 and some change, and then you've got gap fill here at 203 and some change, and then you also have the bull market, the decade-long bull market trend line right here at 204. So lots of support right here. There's a decent amount of support. If we break this level, so this is where I think we're heading in the short term, right around 203, just so everyone knows. So I think we're going there, probably today, but we'll see, maybe tomorrow. And then we should battle with this level a little bit, and then probably break to the downside. That's where I think it's going. Given that I think this was a bear market rally. Or we potentially just chop around a little bit on this level and then gap down. So yeah, that's where I think we're heading, and things are looking like they're going that way sooner rather than later. SPY, bearish rising wedge here, broke the wedge. Just kind of trickled out of it, but then you get the gap down. And this is exactly what I said we were going to... This is pretty much exactly what I said we would get. In the yesterday's video, I said, okay, guys, we've drifted out of this wedge. We haven't moved south too much intraday, so I think we'll get the move in a gap, and that's exactly what we got. We're getting a little bit of a kickback rally right now, but I don't think it's going to fill the gap, and I think it'll just fizzle out probably right here at this 279. Fizzle out right around that level, and then start to head south. So going lower there, SPY is, obviously selling off. Qs is selling off. Let's get into some stocks here. Apple. All right, so look, we got the gap. I had the line marked out right here, 273. We undercut the gap a little bit, and now we're holding support. So they might try to just hold it here. This isn't enough selling in Apple to justify covering my position. But at least, I think we at least need to get down to the bottom of this wedge. So if I roll out here, you've got this support line. Now I only have a couple reactions down here. I've got one here and a couple hours right here. This is an hourly chart, so I can't say with complete confidence that this is my trend line. But I do know there's a gap here, so I do know there's some support there. The buyers should step in right there. But if this breaks, if we just get a brief reaction around this level and then this breaks, that should be enough to at least get us down to the bottom of 270 and then possibly break, and if that breaks, then we're going lower. I've got a trend line right here at 256, so we'll probably head down there, and we'll just evaluate that as that goes. Again, I got short this Apple right up here, and I think we continue to go lower. Microsoft, bearish rising wedge. Lots of reactions around this wedge. You got 1, 2, 3, and then this was kind of a reaction because you got the gap down. So we'll count that as a reaction. And then on the upper end, 1, 2, 3. Clean, nice reactions. The reason why I like these reactions, one, you get the overshoot right here. So that is the trap. That tells you that, okay, we're, think about at this moment in time, if you couldn't see any of these candles here and all you saw was right here, oh, we're breaking out to the upside. Everything's looking bullish. This stock's going to go, much higher. Nope. The next candle breaks down and it fails. So that's your trap. And then here, you got another trap. Okay, we closed the day pretty much on support right here. Following day, gap down. So we trapped all that bullish money. And when you see the gap and crap, which is what we had, we gapped down and instantly sold off. Now, if it can hold down here, then you've trapped all that. You trapped all that long money, basically. Pretty much anybody over the last couple, last week or so, week and a half, has now been trapped to the upside. They just stayed too long in the bull rally, or in the bear market rally. And so now we probably head lower, and then eventually you'll see the selling pick up speed. And that could even happen today. The selling could pick up speed today. Let's SBRA. Bearish rising wedge. Broke to the downside. This is the story in a lot of these things. Here's Costco, this one. I'm short this one. Not a huge position. I've got just a little bit on this, but just a way to diversify some of my portfolio, my short positions. Heading lower impulsively too. This looks good. Nice impulsive sell-off, down 1.5% today. I think we head much lower here on Costco. MGM trickling sideways. This one, that's interesting, but we're probably going to get a gap down to here, 10.54, maybe tomorrow, or just sell off down there. XLV. This one is the one that has probably the cleanest bearish rising wedge chart, with lots of reactions. This thing just put in an extremely precise bearish rising wedge, and we just started to break down out of it yesterday. So if you've been following along, you saw that, and then gap down today. So that's an impulsive move. If you were to connect this white space or the empty space with red, that would show a nice impulsive red candle. So that's breaking down out of this this bearish rising wedge. So look for the selling to increase. Typically these moves don't just end with the initial impulsive move. They've got to, they create some selling. So XOM, this one's just chopping sideways, but it did break out of this smaller bearish rising wedge. This might have been the move right here. I mean, there might be some more upside here in XOM. Nothing that I'm interested at this point. I'm not going to trade it. And that's it for the video, guys. I don't have much else. So semiconductors, I am short this one as well, SOXX. I mean, I don't have as large of a position as my triple Qs, because the semiconductor trade is not as semiconductors are the bleeding edge of tech, basically. So you can usually get a lot more beta out of the semiconductors than you can just like a triple Qs, which has like Amazon and some of the big cap techs. But semiconductors will move to the upside and the downside a lot more typically than the tech funds. So I have some short on this as well, because I, again, am bearish. I think that we're in a bear market rally, and all the charts were set up for bearish moves breaking down out of the bearish rising wedges, and that's what we have here too. So we have a gap starting to sell off. This thing's got a ways to go. Probably going to get down to, here's your gap fill, so I think we'll at least get there, or gap entry, and then here's a gap fill right there. So somewhere right in there is probably the initial move, and then we get a little bit of a reaction, and then head lower. As of right now, everything on the across the market tells me that we're heading lower. So I'm going to continue to just keep that thesis and that theme until I see something change in the charts, which can change instantly. Essentially, some news headline could come out and change that thesis. But as of right now, everything's bearish. I'm sticking with the trade, letting that continue to work. It is working, so the trend is your friend, and that's what we're going to continue to do. So thanks, guys. Subscribe if you're new. If you like making money, then subscribe. And if if you've been subscribed and you've been making money on this, or at least finding value in helping to understand how the market moves, how the charts, how you can read the charts to your advantage. The charts are, to me, like the ability to count cards when it comes to blackjack. So, if you're just playing basic strategy blackjack, then you're using PE ratios, and you're using some of the basic stuff that you can use. The charts and the ability to actually read the charts and practice that skill is akin to the ability to count cards in single deck blackjack. So that is why when the charts are set up and the probability is set up in your favor, and you figured out the highest probability for the next move, then you go heavy on your trades. And then when that advantage dries up, you take the money off the table and you wait for the next opportunity. So that is a skill that you need to develop, and it takes time. But ultimately, you find the probabilities, you find the highest probability move, you put your money down on that move, and then you manage the risk. If the move works for you, you continue to manage it. You take profit into that move as it goes in your favor. And then if the move goes against you, stop out, take small losses, look for the next trade. Thanks, guys. Catch you on the next one. Bye.